Good morning, everybody. Welcome to FXIC Santiago. We're going to start off the day with a panel that discusses the Latin American market in general. Topics will include strategy trends, the client base, tactics, and general insight into the market. Right now, I'll just allow each panelist to introduce himself and speak a little about their company and their current presence, if any, in Latin America. Marcelo, you want to start?
Good morning. My name is Marcelo Spina. I'm with Gain Capital. Gain Capital is a registered company with the New York Stock Exchange in the United States. We obviously have offices in several different areas of the world, and one of the areas where we see tremendous amount of potential growth is in Latin America, hence mine and one of my colleagues' presence down here. We pretty much span the entire client base in terms of from retail clients to IBs to institutional level clients, whether that be exchange traded products or spot FX and other products as well. So we can pretty much, at the end of the day, we can do almost anything for everybody. So that's why we're down here, to really get a better feel for what the market is here in Chile, to better understand the market here, and to also make sure that we can match up the products that we're offering in our product suite as we grow to the Latin American client base.
Good morning, everybody. My name is Joaquin Oliveria. I'm coming from Swissquote Bank. It's a bank based in Switzerland, of course. We are here to work on the Spanish. I manage the Spanish desk. We work with IB retails and money managers and partners agreements too. So we are very interested to participate in this event. As most of you know, we acquired MIG like a month ago, so we didn't have the time to set up everything, to have a booth and introduce both companies together. So this is like a first impression for us to start this event. So thank you everybody for this event and for the presentation.
Thank you.
Hello everyone, good morning. My name's Owen Kerr. I'm the co-founder of Pepperstone. We're an Australian foreign exchange broker. To be honest, we do very little business in Latin America, but it's an area we're heavily expanding in this financial year. So I'll be happy to share my perspectives on how we're expanding into this market.
Hi, good morning. Tovmasyan. I'm the Chief Commercial Officer of Alpari. We're one of the large brokers, per se. Our headquarters is in London, and we have a number of international offices. We see Latin America as a next expansion point, and we're quite interested to see who's here and everybody's plans.
Good morning, everybody. My name is Pereira. I work for Saxo Capital Markets, which is a company of Saxo Bank Group. We're based out of Uruguay. We're already established down here. Been working this market for some years now, and our presence is scattered from Panama, Sao Paulo, and now Uruguay. And I was pretty excited when Ian sent us the invitation about who is the Latin American client. Try to see if I can learn something out of this gentleman as well. So let's see what comes out of it.
Thank you, guys. My name is McAfee. I'm one of the founding partners of Shift Forex, one of the co-hosts of the event. So we'll just move into the questions. So we set up brokers in different parts of Latin America and noticed communication is very important in this region, building a relationship. We find that communicating with the client is heavy prior to commencing business and throughout the business process in Latin America. Curious to hear your thoughts on this topic and maybe some other things that are unique to this region. You want to start, Mush? Thanks.
For us, quite honestly, we launched our Spanish and Portuguese language website only this year, and we recognize that we're quite late to do this because it is an important market. It's quite a large market, and funny enough, without having a website in the local languages, we had a quite user base which somehow managed to come and come to us because of our service. So we've built on that and have a full team of in London, full team of salespeople, customer service people, and educators to focus on this market. At the moment, our plan is to service the market from London because this is our headquarters and we have close to 200 people there. But we are exploring to see strategically where's the next place for us to open an office. We are starting a presence in Mexico, and we see that this as an initial point of contact for the continent. It was an easy transition from our New York office down to Mexico, and I guess next would be somewhere in South America.
Thanks, Mush. Anyone else want to chime in?
Looking at very closely is, and this is, I am Brazilian, so one of the things that we look at is every country in Latin America is very different. There's regulations that are very different in every country. There are people, the customs are very different in every country, and we have to take that into consideration as well. So I think from our perspective, one of the things that's of most interest is to really make sure that whether that be on a hedge fund basis, an institutional basis, or getting down to a partner basis in terms of IBs and things like that, that we really look at the market as countries and as individuals, and not try to really use one very wide brush across all of Latin America, because from our experience, somebody from Chile is going to trade very differently than somebody from Mexico. They're worried about different things, they're looking for different products, they're looking for different services. So we want to make sure that the products and services that we have match up exactly with what the client base is looking for in that specific country. The regulations, obviously, as I'm sure we'll be talking about, are going to be very different in every country, depending on what tier of client you are, if you will. And then also on the institutional side, when it comes to the hedge funds, when it comes to the pension funds and things like that, when we speak to those people, obviously there are going to be different rules and regulations for each and every one of those. So we're very interested to make sure that we are matching up with the appropriate people in that level, and find the right partners in these different countries to provide the maximum service with our products suite.
In our case, Latin American market is very important. We're working with Latin American market, I would say, in the last 7 years. We have a team of 8 people based in Switzerland, and we are looking to expand ourselves in the Latin American region. We don't have time frame for now, but definitely it's very important. And as he was mentioning, the Latin American region, everybody sees it as a whole continent, but each country has a totally different way of working. Regulations, restrictions, even trading, as he was mentioning. And the way of approaching in each country is completely different. So this is one of the most difficult things when somebody wants to target Latin America, because in general people think it's just one continent and everything is the same. But we have to deal with different regulations in every country we work. And even with the clients on the retail side, it always happens. On the retail side, it always happens that clients don't know, or like the level of knowledge of the market depends on each country. It's not the same to talk with a retail client or a partner from Chile than from Mexico, than from Brazil, than from Bolivia or Honduras. They are completely different, so we have to adapt every time we talk with those people and with those countries. The approach is totally different. So that's a key, the most important thing when you target Latin America. So this kind of activities is very important to approach and make all those things to make them together, let's say like that. And at the same time, in the regulation side, there's not much regulation in Forex environment. Some countries are starting to work on that, and this is something very important where we have to target and aim in the future.
Yeah, I guess our strategy in Latin America is quite different. I mean, we operate through introducing brokers and money managers. One area of interest that we really have learnt over the years is to really vet our introducing brokers very well. Not all IBs are created equal. You really have to be careful about who's representing your brand out there. There are some good ones, there's some bad ones. So that is something I would really like to emphasize for any other broker who's looking to deploy in Latin America.
No, I think that one of the things that you guys touched, the knowledge about the client and the difference among markets, it doesn't really matter if markets border one with another. You can find different patterns in trading and investing in all of them. We found that being closer to those markets played a role in the way we developed in Latin America. This regardless if it's through our actual presence with a rep office or a broker as we are in Uruguay. Like you said, finding the proper representatives, the local distributors will give you a hedge on the distribution, because in the end you need to find out people that actually are embedded in the market, not just us randomly visiting this place or the other. The thing that will in the end play a role in the success is actually finding someone that knows the market inside out and helps you distribute in the best way possible.
Thanks, guys. That leads in pretty well to the next question. The scams and Ponzi schemes that have affected the market in Latin America, but also across the world, have affected the credibility of the asset class to some extent. And how do you feel it's recovered from that in general and also in Latin America? And where do you think, how do you pave the way to unteach clients that FX is really a reputable asset to trade?
Should I?
There you go.
Well, we're definitely at a better stage now. Some 4 or 5 years ago, it was basically a nightmare. Schemes on FX were growing up like mushrooms. We had to face there are, I think, 2 countries where it impacted the most, which was Mexico and Colombia. In Colombia, it basically created a huge issue. Us as a company had a lot of problems actually having to send letters justifying transfers on behalf of our clients, because anything that stated FX or Forex would be banned by the local banks to transfer. I think that between the work that local authorities have undertaken and the fact that we're probably, and you were mentioning it, we're probably more careful choosing who represents us right now, took a lot of people away from the market. But we keep on being called by potential clients asking, can you generate 50% for me in 2 weeks, like the other guys are promising? And this is a work that we as an industry need to take into actually explaining people that this is a market where you have to work hard to get some profit out of it, and it's not going to cut it for you just because you're sending your money to someone that promised you profitability. Regulation is also going to play a huge role on this.
I was just going to say that you have basically a 2-prong approach. There's the education of the client kind of upwards, and now what we're seeing more and more is you're because of some of these scams as well as larger issues that we have, going from individual scams all the way up to MF Global. What you're seeing now is the regulators now are stepping in more and more and making this so that I was discussing with a colleague a little bit earlier today. In the past, you were able to get a client through at a big bank. You could get credit, you could get things like that with a client in maybe a few days, whereas now it's taking months. And all of that has an associated cost with it. All of that has it's becoming a much more difficult situation to do business on different levels. But I think at the end of the day, what we're looking at is from the education from the bottom up, and then also with the regulators, working very closely with them to make sure that while the regulation is there, it doesn't become overbearing, if you will, so that business can't be done, and having those close relationships with regulators, not just here in Latin America, but around the world, as a lot of these regulators are getting closer and closer in step in terms of what they're doing with them. So it's really maintaining those relationships. I think as Luis mentioned, a lot of these scams, they continue to come up, and they will be a part of business as long as there is potentially money to be made. And what we have to do as an industry is really help to educate the clients and really help to, at times, work with the regulators to make sure that they're on the same page as all of us.
Yeah, I think regulation is only a good thing here in Latin America. It enhances the credibility of the product class, and it can only help. So I think regulation needs to come a long way, and it is probably looking to enhance the product.
The scams and all the illegalities are an unfortunate part of our financial industry, and more importantly the FX industry that's kind of taken longer to get regulated, and it still has a lot of unregulated elements, and education, like my colleague said, is a key part. And we've seen this in other markets that are now more developed, such as the Middle East or China, where the same things occurred. And because there's more penetration of brokers, a lot of money is being spent in educating, in materials, in face-to-face time. This is changing, and I think the the local players, partners, IBs, they're embracing this, and I think everybody maximizes the benefit. And just to touch on the subject of Colombia, I think it was a really good example of, it was such a massive scale and it went through a big cleanup that now it's quite interesting to see, the housewives know what FX is, how it's traded, and kind of you do see the benefits after kind of a big unfortunate event, and whether we basically can't let it, such a big unfortunate event, educate the market. I think the brokers need to do their own efforts and spend money and educate the easy way so that the clients don't learn by mistakes but learn from just good quality education.
So that one leads in well as well. Do you feel that offering education is critical to having an offering in Latin America to really teach the clients that this is something that your company is willing to do, and also with regulation, where do you see that going? Can you draw parallels to where Latin America is now versus some of the other regions in the world that have come a little further, like Asia or maybe somewhere else?
Well, in that aspect, it's true that education is really important, but the brokers and the banks, we have a big responsibility, not only educating people and educating ourselves, because those schemes, it happens in brokers, in banks, in entities that allow those things to happen. So the education is both ways, not only for the retail client or for the people, the clients, but it's for ourselves at the same time. We have to keep working very hard in that aspect to not let schemes happening, because at the end who lose is everybody and the industry in general. So compared to cases in 5 years ago, we are very advanced, but Latin American region is still a bit behind compared to Europe or United States or Asia, of course. And this is something that we have to keep working a lot all together, not only educating the retail, just at the same time educating the regulators and looking inside ourselves to see how each company is dealing with those situations.
I mean, I see two sides of kind of this brokers educating. You either do it for marketing purposes, just to get your brand, your name out there in publications, or you do it genuinely to provide a good service. And I think from our side, this 2013 was a big year for Alpari to focus on building an educational offering, to offer webinars, to offer we have news analysts in different languages, and once you see the outcome of it, when the webinar is full of people and they're asking questions and you see the benefits of it, I think that makes the difference, and that is what's needed for this type of markets that are quite young to the product, to the asset class.
Yeah, at the end of the day, we really want long-lasting, well-educated, long-lasting traders. So any sort of educational offering that enhances their lifespan can only be a good thing.
I would agree with that. And also just on the other point that you were mentioning in terms of regulations, where Latin America currently is, where the rest of the world is, I think what we're starting to see now is, for example, in the US, in the UK, and several of the larger regulators in the world, what they're starting to force more and more through one method or another is centralized clearing. At the end of the day, when we look at the CEFs with Dodd-Frank, and we would look at what's happening with EMIR and the FSA and certain things that they're doing right now, what they are pushing is more and more transparency and more centralized clearing. What we've, one of the things that we've done is really worked on the technology side to be able to provide that primarily to the institutional level client, whether that be hedge funds, whether that be people that are looking for liquidity and things like that, to be able to provide a product that they can have all that information where we're taking the reporting on our end and being able to work with different exchanges and things like that. But also, I think as time goes on, what we may be seeing is more of that trickling down, if you will, into the retail sphere. So right now, what we're seeing kind of at the higher level in terms of the institutions, what they're forcing people to do in the U.S., in the UK, and more of the reporting requirements, whether it be MAS in Singapore or the SFC or even ESIC, who is having some fun with FOFA right now. And but at the end of the day, we're seeing a lot of these regulators coming in and putting in regulations that are going to force more transparency, more centralized clearing and things like that. And we as participants in this industry have to be prepared for that and should be prepared now at this point.
Let me just add one thing, which is based on what you were saying, the fact that a lot of us are from either American or European countries. There's a lot of spillover from the regulation that is being implemented. You mentioned EMIR. I'm being forced to sign papers over papers around EMIR, and it's something that is viewed positively by the regulators that are still very, let's call it, young and overseeing this type of market. The fact that we are having spillover from more mature markets is something that is viewed very positively.
So moving on to something a little more positive and where the opportunity lies in the region. There's many different types of clients. There's direct clients, IBs, money managers, and even other brokers. So where do you feel the sweet spot is right now for Latin America, and where do you see opportunities also potentially in the institutional space?
Yeah, definitely. I think the white label space has a lot of legs here in Latin America. I mean, it takes a lot of work to delve into these key regions. Each country is different, so partnering with a local partner, a local domestic bank, and offering your services via a white label is a really good distribution strategy, in my opinion.
I would agree. The white label and the partner strategy is a very large one here in Latin America. I think also when you're looking at more of the institutional space, you know, when you talk to some of these hedge funds, some of the pension funds, every single one of them has 4, 5, 6 different PB relationships that they're working with right now. You know, they're putting one trade over here, one trade over here, one trade over here, and then you consolidate. At the end of the day, you know, I think really what's going to happen is when you have platforms that can aggregate those relationships, have kind of that, going back to that central clearing kind of a concept, I think that's going to be that's going to really help us in the Latin American space in terms of providing efficiency for some of these clients, providing, you know, a standardized basically portal that they can go to, start trading there, and see all of their information in one place. So I think on the institutional side, it's probably we're getting almost back to an exchange level type of product offering that we're looking at on that front. Whereas on the retail side, I think the white label, that business still has a lot of legs, still has a lot of growth potential in this area.
Basically, for Alpari, we see the market, our product line is divided into 3 lines. One is retail, the other one is B2B, and the third is institutional, credit-based, prime broker-based. And we see an opportunity in all 3. And I think, you know, I'll touch on a bit on each one. On the retail side, the challenge with Latin America, because it's quite vast and different, you know, it's reach. The brokers, no matter where they're based, it's quite hard for them to reach that end user, that end investor. You know, they can market and, you know, do sponsorships and so on, and it works, but only to a certain extent. You know, the next natural thing is to partner up with local educators, IBs, you know, training camps, and, you know, every type of IB there is, because they provide that essential service of promoting your name, your brand, the product class, and as Owen said, you know, choosing the right partner is extremely important, because you're trusting your brand, you know, and you know, you could be penalized for it too, besides the reputational damage. In terms of B2B, it's no secret in this industry that it's, you know, quite hard to get the right liquidity, the right technology to get the right product, to build the right product to deliver. So whether it's, you know, API liquidity or white labels, I think those partnerships are quite important, because, you know, this happened in other parts of the world that were, you know, more advanced, but now, you know, there's opportunity for local brokers to seize you know, just this opportunity, the time. It's the right time, we believe. And they need support, because you know, unfortunately, this is kind of the structure of our market. And on the institutional side, it's, you know, this credit relationships based on what's happened regulatory-wise across the world. It's quite hard. So, you know, there is a lot of demand for banks, hedge funds, you know, family offices to get access to these markets, to good liquidity. And, you know, one way of doing this is via credit relationships, because, you know, money transfers is another kind of a challenge for this side of the world.
So each of you is based in a separate country, and it's interesting to hear the different perspectives on where the priorities are with Latin America. How do you rank Latin America in general? There's a lot of opportunities around the world. This one is unique, but is it one of the most? Where do you feel it falls in what your current activities are in terms of targeting?
Well, we definitely see it as one of the growth areas for the whole group. That's why we in the last couple of years we made the investment of developing 3 different offices for the region. We truly believe that the fact that everybody is discussing a slowdown of the emerging markets and economies is one huge opportunity. Over the last couple of years, what we've seen, and you know, Marcelo is Brazilian. You go to Brazil, and why should someone invest in foreign assets or foreign currencies? You know, you have a currency that is valuating, an interest rate that is quite interesting. Why should you even consider other options? I think that, you know, we're at a stage where we are going to probably face a slowdown in this economies, but this can be a real opportunity to diversify into other asset classes, being it, and picking up a little bit on what you were saying before, through retail distribution or redistribution, but also it will give us a huge opportunity to tackle into the asset managers, the money managers, all the type of potential clients that will need to look into other markets to keep on providing the profitability that they were showing. It's going to become harder for people that need to look for profitability on their work to do it just based on domestic assets. And I think that for all of us in the industry is going to be a massive opportunity. It is. I truly believe that it's just starting. It's not there yet.
I would agree. I think that one of the big things is, as you mentioned, it's yield, right? At the end of the question, at the end of the day, everybody is here because we're part of a business, and what we're doing is we're looking for yield. Now, whether that comes through, as Mush was saying, you know, whether that comes through a retail side, whether it comes through a partner side, or whether it comes through an institutional side, at the end of the day, those clients are also looking for yield. The hedge funds are looking for yield and everything like that. In the past few years, what we've seen is, you know, primarily Latin American assets have valued tremendously. I don't have to look. I don't have to search elsewhere for yield. I don't have to look for a different product. I don't have to look for a different service. I think as things have a tendency to slow down a little bit here, whether that be, you know, compliance, whether that be because of the political situation, whether market forces, people start to look outside, and that's when we have an opportunity to step in again and reignite a lot of the conversations that have been going on for, I think, you know, we all run over one another depending on the country that we're talking about. These conversations have been ongoing, and I think in Latin America now is the time that triggers start getting pulled. It's a time to actually start executing a lot of this business that people have been talking about for a period of time. And, you know, obviously, I think that'll, you know, some of that is actually done on the retail and the partner level. But I think probably the first mover has a tendency to be on the institutional level, and then that would trickle down a little bit more over time. I think we see a lot of things being done. You know, if we look at different countries, whether it be Brazil or others, a lot of these countries on the financial markets are still dominated by the exchanges, and that mentality also flows through to even down to the retail side. I know in Brazil, you know, for the first time now they're talking about home brokers and things like that, you know, which is an online platform for lack of a better term. This is something that the rest of the world we've been doing for many years, and now it's starting to be accepted. So the question is, you know, are we at the point now where the acceptance of that technology is actually being done on a retail level? The institutional players are all doing it. Now it's a matter of finding the efficiencies at that level. So if you have a product suite that provides all of that, whether it be through, you know, every one of us has products, whether it be GTX or something like that, every single one of us has products at all of these different levels that we believe match the efficiencies that are needed in that market right now. And now's the time that we are hoping that the client base in Latin America is ready to pull that trigger.
Yeah, I think really the internet penetration in Latin America now has really gotten to a stage where an online Forex trading platform is really ripe for consumption. I think the infrastructure's there, and it's only going to improve over the next 5 years. So in terms of deploying a product to an active client base, I think we're in a good position.
No, that leads into the next question. I mean, there's a lot of shortcomings to dealing in this market with the capital controls and the questionable past with scams and regulation, but there are also some advantages with the increasing internet connectivity. Where do you see other advantages in targeting this market?
I guess local know-how is very important because big brokers, from outside, we can try to do the best job we can, from our offices in London, New York, wherever. But, that will only take us so far because it is a big market. It is quite different one country from another, and it's basically just the local know-how. So it's making the right partnerships. And in terms of product, what you were saying is it's always evolving. This is probably one of the industries where there's most innovation in terms of technology of products that you're offering. And the clients, the partners, the IBs, they're looking for that edge. The edge over, not over the competitors in the same industry, but edge over other asset classes, other financial instruments that have a yield, that cool factor, the accessibility, whether it's on mobile phones or web traders or so on, I think we're in a time where kind of these gadgets and the coolness of it matters. It goes a long way.
I think also in Latin America you have a situation where people already know this market much better than other areas of the world. If we're to compare it to the United States, I would say that there's a good percentage of people in the United States that don't even know that there are multiple currencies. Now they're starting to understand better and better that there are multiple currencies around the world. But I remember, back in the 80s, going down visiting my family in Brazil, and people would literally leave if they got paid on a Friday. They would leave at lunch to go and buy groceries because if they left after work to buy groceries, they wouldn't buy the same amount. So the financial concepts that we're talking about consistently within this market, whether it be inflation, whether it be interest rates, whether it be a currency appreciation versus another currency, people fundamentally understand that. At least the people that we would be interested in dealing with fundamentally understand those concepts. So it's already a leg up against versus the rest of the world. That's where I personally see a lot of benefit in Latin America because people fundamentally understand this market better than other areas of the world where the market's already established, if you will.
Well, our Argentinian neighbors, they're the best ones, arbitraging the several different rates of the peso against the dollar. But it's making that knowledge translate into actual business because, like you said, the knowledge is there. People in this area have faced several different crises, several different currencies, and they probably know better than any European to trade FX for their daily life. It's really translating this knowledge into how to invest in a new asset class for them.
And where do you see the industry here going in the next 5 years? Base it on what you see in other regions or your knowledge of this region or your knowledge of the FX market in general?
I mean, I think for our asset class, and especially here, trust is key, and competition is healthy. So I see more brokers, more genuine brokers, marketing here, opening up local offices, doing seminars such as this one I think are very important for the market, and this will spread. It's one thing to the next, and it spreads. So what we plan for, what we want to see is more competition and basically more players here. I think everybody knows it's virgin, it's big market, there's a lot of people, there's a lot of growth and wealth and so on, but it's been a lot of talk. So I think in the next 5 years it would be implementation because the other markets are getting saturated.
I think you're also going to see over the next 5 years, I agree wholeheartedly with you. I think there's going to be a lot more competition down here. I think you're going to probably be seeing more and more of each and every one of us. But then at the end of the day, it's also going to be, what are we going to, what's the playing field going to look like? Are we going to have a similar playing field across the world? Is Latin America going to be very different from the rest of the world? I think we're starting to see equalization across the board. Again, going back to the old centralized clearing, transparency, and things like that. Whereas here, because the exchanges have such power in Latin America, you already have some of those concepts. So it's going to be a function of, are you going to see some of the other regulators of the world come more towards Latin America? Is Latin America going to move a little bit towards the other sides of the world? And it's really going to be, I think what you'll see is 5 years from now, we'll probably have a much closer to a global standard, if you will, in terms of regulations, in terms of compliance, and whoever's the first mover, whether in terms of technology on the institutional level, is going to benefit from that, and then that's going to trickle down to the others as well.
Yeah, I really think stability is key. I mean, over the next 5 years, we really need to see a lot of stability, political stability, and easing of currency controls and things like that. I mean, ease of funds and deposits is key for growth in this business in this region. So an easing of that in certain regions would help it a great deal.
It's very well organized, and at the same time, what's going to happen I think in the next 5 years, what will happen is that everything is going to start to be in place. For example, the regulators are going to be regulating correctly. As everybody said here, there are more and more serious brokers and entities working in the Forex environment. The market is really big for everybody. There's a lot of space to keep working on this. And again, the education in the process is very important. The stability is something that in Latin America, I'm Latin, so I know that this is a bit difficult sometimes, and we have to deal with those kind of restrictions that happens in different countries, like in Argentina or in any other countries. So this is something that in the next 5 years is going to start to be a bit more organized and clean, I would say.
Questions? Anyone have any questions?
Hello, my name is Bernard from Unitrader, and first a statement. As far as we know, we're the only licensed company in Mexico. We've traded Latin America for a long time, Spain, Portugal, Italy, France, and the one thing that I really want to know is how we can all work together to expand this licensing to other Latin American countries, such as Chile, Argentina, etc. Does anyone have any ideas? Thank you.
I think Australia is probably a great example of this. You know, what we've seen in Australia, and I think some of us are members of the group, is what you have industry groups that are really working within a specific country or within a specific region. So, you know, within the U.S. we have an industry group, advisory board, if you will, that works closely together with the CFTC and the NFA. There's another industry group that's working with ASIC. There are several industry groups that are working with the FCA. I think now we're in Latin America, I think we're probably getting to the maturity level where pretty soon you will see, you know, not just a country-specific industry group, but you're probably going to see a Pan-American industry group coming up pretty relatively quickly here. And I think once you have that, then you start create standards. I think many of these different countries have really relied on the industry to give guidance when it comes to the regulators, to give guidance on how we do things, what we should be doing, what's the level of transparency we need, and things like that. Whereas I think in Latin America right now, what you're really doing is you have the government basically telling the industry, this is what you need to have, right? So I think that that relationship between the regulators and the relationship with the industry is now starting to mature a little bit more. And rather than just have exchanges working directly with the government, I think you're going to start to have industry groups work with the government. I think that would probably, in my humble opinion, that would probably be one of the best ways to kind of start that process there.
Hi, hello. I'm Chilean, you know, and one thing I don't see from you guys, from the platforms, and from the liquidity providers, is that a lot of banks, I don't know, Chilean banks, Peruvian banks, Brazilian banks are buying each other, are doing mergers, and it's a matter of time that we start trading each other, you know. We only need to give credit lines, and I will be able to buy Brazilian currency directly from, I don't know, Itaú, or maybe Peruvian, the pen directly from, I don't know, a Peruvian bank. So today I have to go to New York, I have to go to Berlin, I have to go to, I don't know, whatever the place is to buy the currencies. And I have never seen a liquidity provider to do the match between all the countries we have here. Now the exchanges are, how to say, are joining. I don't know if you are aware of that. We have Chile, we have Peru, and we have Colombia. Hopefully, Mexico will I don't know, join also. And I think that's the next things for the 5 years to come. I don't know if you are looking at that.
No, I think that's definitely a valid point. I mean, no one of us here are offering those currencies through our platform. There is a niche there, and probably a good strategy in terms of attracting Latin American clients to offer that sort of product. So that's a good point.
At the same time, it's a question of maturity. In our case, we're having, for example, Brazilian real, we have Mexican peso, and little by little you start adding those currencies as soon as you start targeting those specific countries. You cannot have the liquidity in our case of each currency you have in Latin America because of a matter of liquidity. If there's no liquidity in the market, the prices get very high, and that's not competitive for the client. So that's something that we're facing, and in terms of 5 years, this will be totally different. It will start increasing to have much more products for the Latin American region.
I think your point with regards to exchanges coming together and providing more liquidity and those things, I think really at different levels of clients, you're already starting to see that within this market. If you're looking at the institutional level, for example, on our GTX platform, we have the dollar versus Chilean peso, we have the Mexican peso, the Brazilian real, all those things are being traded, but those are being traded with institutional level clients. I think over time, as liquidity becomes more and more available in those clients, that then has a tendency to trickle down. The other thing also has to do with regulations and how you trade those specific products. I think most of us here trade on a spot level. Some of these things have to be traded as NDFs and things like that, which brings in a whole other side of regulation. So I think as you have maturity with regards to the same way that you have maturity within the exchanges, as you have maturity in these products and some of these things actually start changing, whether it be because a particular company starts looking or a country starts looking differently at currency, restraints and things like that, then you start seeing this product go further and further down the consumption scale, if you will. Right now, you have to trade them, at $1 million a clip, $2 million a clip, so forth and so on. Whereas in the future, that availability may be for a smaller client base as well. But definitely, I think you're right. That trajectory is probably the trajectory that most of our markets are going in.
Any other questions?
Hi. I think that the Latin American market, it's a very virgin market, and that's why I agree with you when you say that education is important. Indeed, I think that education is so important that I have a business of school, a school of business where I offer Forex and investment courses. I started this project 8 months ago, and I already have more than 300 students. However, and please don't take this personally, but every broker says that education is important, but they seem to be more interested in getting more and more people making deposits and trading than educating them. And I say this because I've contacted many brokers around the world, and they can only offer me IB accounts, which, by the way, I already have many of them. And what they want is me sending them my students so they open accounts, but none seem to be willing to send their clients so I can provide education for them. And I have a second question. It's more curiosity. I hear you talking about countries like Argentina, and I'm very curious, and how do you plan to approach these clients, if even possible? Because people from Argentina or Venezuela, even when there are many wealthy people, they don't have access to American dollars. So I'm very curious about how you plan to approach them.
Sorry, could I just ask you to repeat the last part of the question? I couldn't understand it. Regarding Argentina.
Yeah, sorry. Argentina and Venezuela are countries with the people have problems to get American dollars. They don't have free access to American dollars, so I'm very curious about how you plan to approach these clients.
Yeah, you're right. I mean, Argentina is a very, very difficult place to do business at the moment. It's very hard to get money out. It's a very, very difficult country. So, I mean, yeah, we take it on a case-by-case basis, and we really rely on the client and I guess their knowledge of how to access US dollars and then make a deposit. We really have no methodology, and it changes day by day. So.
I also think a lot of the different firms have internal education departments. I think depending on and it also depends very much upon the market. Yeah, there are a lot of resources available to the different clients that become available once they become a client, whether that be different trading strategies, trading ideas, but also just education, for lack of a better term. You know, a company like yours is very interesting to us because I think everybody here acknowledges the fact that the education within this market, we always want more. We always want to have clients that are more educated. We always want to have clients that are going to be in a better situation. And the fact that you're doing that and working with these clients helps to give them a greater longevity, helps them to trade for a longer time, and helps them to really understand, because at the end of the day, many people are still looking at this as a very speculative market, whereas over time, you know, the ideal situation would be for this to grow into an alternative asset class where you're talking about true investments and hedging and other parts of it. So I think that it's a maturity factor within the market. You know, Venezuela and Argentina, you know, the question is that a market that you necessarily, if you have all of these barriers to entry, if you will, into a specific market, and I'm not going to speak about those two in specific, but just in general, if you have barriers to entry in a specific market, and there are other markets that have fewer barriers to entry, and could be potentially, as you mentioned, you know, you in Venezuela, you may not have a lot of people that have capital that would be able to trade. Then there's a business decision that has to be made in there prior to even the education decision, which is, what is my potential, you know, yield in that particular market? And if the potential yield in that particular market doesn't necessarily make sense, you know, then that becomes a lower priority market, if you will, and we focus on a higher priority market, whether that be Chile, whether it be Brazil, Australia, you know, whatever country that that may be at that time. So I think really it's a function of prioritization, understanding the market space, and that's where really I think, you know, as we mentioned in the first topic, Latin America is very different in the sense that you can't paint it with a very broad brush. Every single country is going to be different. That's why partnerships become so important in this specific area of the world. And as my colleagues mentioned, that's where the vetting of that partnership has become that much more important right now, because it is going to be your name on that product as well.
Hi everyone, this is Alberto. I'm from BMFN. We've been working in the Mexican market for more than 5 years, and we'll be glad to share ideas with you on expanding the Mexican and the Latin American market. Just please let us know. Somehow we know a little bit more the market, and we'll be glad to share any idea or any thoughts you had for the market, in specific the Latin American market. Thank you.
Hello, good morning. I just wanted to know how do you see the customer in Chile? How is the Chilean customer? How do you approach the Chilean customer? Thank you.
Yeah, to be honest, I see the Chilean customer as the ideal customer in Latin America. Affluent, well-educated, and there's no capital controls here. Yeah, they are fantastic clients. Their level of education is quite good, and the financial knowledge and the trading frequency we see is quite substantial. So we find Chilean clients to be quite good.
We see the Chilean market. It's very interesting in the aspect that the client knows what is Forex about. There's a company that's been working here for many years. Most of you probably know it is Forex Chile, and have been doing a great job in this country, educating and at the same time offering the Chilean peso. There's something that they did a lot. They did from the beginning. I'm sorry, and it's a market that definitely everybody would like to be in, and is a country that has most brokers are based in Chile. They are not based in Mexico or Brazil or Argentina. Are based in Chile, most of them. So this talks about the reality of the country in terms of Forex. It's a very good market, and the client base. The clients know what they're talking about.
I was gonna say that, you know, we're all here because of that, because we do see that the Chilean market is important, that it's, you know, kind of leading the rest of Latin America in kind of freedoms and knowledge about the industry. And, you know, we would like to see this country lead the rest of the, you know, countries to follow, basically, and having more brokers pop up in other places, having the financial controls relaxed by the government, and having, you know, that the trust that, you know, this market isn't just about scams and, you know, promising 1,000,000% returns. You know, it's a genuine asset class. There's opportunities if you know, if the client trades the proper way. So I think it's just cementing the trust in the industry and in the players.
I think that regarding Chile, there's something that is very specific about the country, which is the image that people have about their own financial system, which is not that common in other countries in Latin America. And I think, you know, for the brokers that open their offices here is quite a good bet, because you know, yeah, in other countries it's easy to you know, sell people the idea of opening an account abroad. The Chilean audience is very keen on keeping their investments in-house and relying on their own country and their own stability to have their accounts. In that sense, I think that Chile is very different from most of the other large markets in the region.
Time for 5 minutes. A little, one more thing. Do you have any studies, projections, or numbers about what will be the ceiling on Chilean customers? I mean, in a 17 million people country, how much of them might be actually invest?
To be frank with you, I haven't seen any studies, only because there's a couple of companies that I'm sure we all subscribe to that provide regional market analysis and regional market studies. What we've seen in general is, you know, Chile is obviously ahead of the curve with regards to most of Latin America in terms of market penetration, with regards to alternative asset classes in the specific, when we're talking about FX in specific. But I think realistically, I personally, and I can't speak for my colleagues, but I think most people are not too worried about the market cap yet, only because we've seen much more mature markets, whether that be a Singapore or, you know, a lot of these other markets that theoretically have similar, maybe some of the similar characteristics, whether it be size, whether it be penetration, whether it be acceptance of the markets, and we're nowhere near hitting the cap. I think most people, when we look at Chile, it's really a blue sky type of a territory. There is acceptance, but we're just starting to scratch the surface, whether that be with the pension funds, whether that be with hedge funds, whether that be with down to the retail client. I think there's still a tremendous amount of opportunity, and I have not seen the concern, if you will, with regards to the overall market size. You know, are we kind of hitting a cap, or what are we expecting in terms of the penetration of that specific market, or, you know, how many people are going to trade FX, for example? I think really what happens is we're also seeing an evolution, not just in terms of the client, but we're also seeing an evolution in terms of the product base. So I think if we were to all look at our product offerings 5 years ago versus what it is now, it's changed massively. So we have become very nimble in terms of changing what our product base is as well, and providing that to the end client. So as time goes on, really it becomes more of a question of efficiency of our products and what we're offering out versus, you know, is this market capped in one particular market space, if you will.
Yeah, I just wanted to add to that I agree that it's, you know, too early to kind of look for that ceiling, and a perfect example is the US versus Japan. You know, US is a massive country, very wealthy, a lot of people, but the volumes, you know, just don't register against Japan, where, you know, the housewife trades and the volumes are just astronomical. So it's just a matter of the country and how embedded the product will become in the financial industry into the, you know, the average, middle class citizen.
Any final comments from the panelists? Questions? I think we have maybe 1 more minute, or are we out of time?